Hey, what's going on guys? It's Henry back with another video, and today I want to show you a bearish strategy where you can make money on a stock falling using a custom option order that I'm going to show you that's really interesting. In fact, this custom option order can basically triple your money. And the reason why I want to show this to you right now is because the market is very volatile. I am pretty bearish on the market, and a lot of people have stopped investing because they've lost money. But honestly, you can make money as the market falls. No one said that you always have to be a bull. You can also be a bear. And if the market falls, you can actually profit off of the market falling by using options. So in today's video, I'm going to show you a position that I am interested in opening on Netflix. Now, this Netflix position is going to be a little bit complicated, but honestly, I'm going to simplify it, make it really easy, even if you're a complete beginner. I'm going to show you how this custom order works. And I've done this before on Facebook. I've used the same exact custom order on Facebook, and I basically made a few $100s in a few days on a very tiny sum of money. So this strategy is amazing for small portfolios. But first, I do want to show you the technical chart on Netflix. And by the way, if you like this video, leaving a like on the video really helps me. Subscribing helps me out. And you can also check out all my trades and every position that I have in my portfolio by signing up for my Discord community. Now, if you take a look at Netflix, this stock isn't really having a clear direction right now for the past 2 or 3 weeks. So the past 2-3 weeks, this stock has been hovering around $220 to $230 per share. This stock is bouncing up and down. But if you take a look at the stock, it has been as high as about $249 in the past 3 months, and this stock has been much lower. In fact, it's been under $175 per share for a very good period of time. And for me, I am pretty bearish right now. If I look at the stock, it is looking like it has recovered a little bit. However, I am bearish and I think this stock can go down. Now, specifically, I'm looking at the moving average. The moving average is about $215 per share, and it is rising. It's going up. However, I think the market is going to continue being shaky, and Netflix doesn't really have the best business right now. It doesn't have the best reputation right now. It's losing subscribers. So in my opinion, if the market goes down, Netflix is a very good candidate to bet that, you can make some money as the stock falls down. Now, I think that Netflix can go down a lot. Sometimes you get really big surprises in the market, and the moving average is 215, but I really wouldn't be surprised if Netflix really fell down and started bridging this gap. In fact, if I go to the line right here and I make it a candle, you'll see that there was a huge gap upwards here, these green candlesticks right here, and that pretty much does have to be met in response at some point. So there's a lot of buyers, but all of these buyers could be sellers in the future. So although this stock has moved up a lot, and you can see that there's many green candles, if I go to the 1-year chart though, you will see that there was many gaps down as well and many red candles. So let me go back to the 6-month chart right here, and you can see that there was a huge gap lower, and it was pretty much filled, but this was really due to a lot of bad news on Netflix. So I wouldn't be surprised if this gap does not get filled in the future, because Netflix is not the same business that it used to be. Now, if we go back to the 3-month chart, these green candlesticks are bullish. However, now you can see that there's a lot more red candlesticks being presented to us. So if I take a look at the most 2 recent green ones, sure, they're here, but the pattern is actually not looking that good to me. And as you can see, it has reached a high point. This little point right here, it reached here, and then it couldn't maintain that. So if the stock was really bullish, then it would basically maintain it right here. The stock would kind of go up and shoot upwards, but it is not doing that. It's pretty much stalling. And if I draw some lines here, if I draw at this point down, you can see that this stock is forming a wedge pattern. It is going down. So if I look at the peak right here of 249, now 228, I wouldn't be surprised if we would meet somewhere around this area, right? Maybe $215, but potentially if the market falls, then of course Netflix is going to fall with the market. So I wouldn't be surprised to see this stock hit around $200, maybe even $190 per share in a worst case scenario, right? If things continue to get bad. Now, if things get good in the market, then fantastic. But having a little bearish position in your portfolio could benefit you a lot, because when and if the stock market falls, then you can have a really good short-term gain on your hands that will hedge your portfolio. So although your portfolio is down 3%, a position like this, if I go back to this max loss and this max profit, could be up, 3 times, right? $773 could turn into $2,400, right? So the maximum amount of money is $2,400, but of course, since this position you're spending $773, your maximum profit is only $1,700. Now, let me show you what this position looks like. So I did a combination of buying the 200 put option, then selling a call option. So let me just show you from scratch what this looks like exactly step by step. Now, again, the way I really determine the strike price prices is, again, by looking at the moving average, looking at these candlesticks, and kind of forming an opinion that I think this stock can trade below 215 and then maybe potentially as low as 195. If I go to indicators and I pull up the Bollinger Band, which is basically telling me where the stock could trade within the next 20 days, that's what this 20-day period is. And the standard deviation is 2. That is 2 standard deviations. That basically means 95% of the time, that's where the data is going to be. And boom. So as you can see, the market would completely not suspect the stock to go below $213 per share. However, in some cases, when the market does end up falling, the Bollinger Band doesn't really represent how low the stock can go. And because Netflix, again, isn't really the most premium of company at the moment, and it was just recently up 4.84%, if the market changes sentiment and momentum starts to go down, then this stock is going to fall like a rock. Again, I'm not predicting that the stock market is going to crash. I really don't know, but this is an interesting position, and I want to teach this to you because if you think the market is going to fall, or if you find a stock that you don't like, you can actually use the same exact strategy that I'm going to show you right now. So the way you begin this strategy is by first buying a put option. So I'm going to buy a put option. Now, again, I said that the stock could fall down to about $215 per share. So I'm going to buy the 215 strike. Now, I do want to expand this option. I just want to make sure that the bid and ask spread is pretty tight. And here, it's not too bad. The difference is about $25, so that isn't bad at all. So I am going to buy this put option, and now I'm going to sell a different put option. So I'm going to sell the $200 put option right here. Now, the reason why I want to sell the 200 put option right now is because I want to reduce the amount of money that I have to spend right here on this 215 put option. So this one would cost $1,400. However, if I'm selling this, which I wrote buy, which I want to get rid of right now, if I go to sell put option and go to 200 and I end up selling this, then my cost goes down. It goes from $1,400, which is what I have to pay, but then I subtract the $890 that I'm collecting, and my total cost is only $510, or basically $500 to turn it into $1,000. So this would be a double on our money. However, I'm not really done here yet. This would be a put debit spread. A put debit spread basically bets that a stock will fall. So a put debit spread says that if the stock falls to say 215, then you start making money all the way down to 200. So your maximum gain here could be $2,000. So we're spending about $500, but we can make up to $2,000. In my example, since I'm using 215 down to 200, that means I can make $1,500. If it was 225 to 200, that would be $2,500. In my example, we can turn $500 into about $1,500, which is why the maximum profit says $1,000. Now, I have a put debit spread open right now, but what I want to do is I actually want to increase the amount of money I'm collecting and further bet that this stock is going to fall or at least not rise. So what I'm going to do is I'm going to go sell call option, okay? So now I'm going to sell a call option. And again, if we look at the chart right here, yes, the stock could potentially rise, right? Anything can happen in the market. However, this bearish trend to me looks pretty bad. It looks like Netflix is going to continue to have not the best performance. And in fact, this stock could end up crashing if the market crashes. So what I'm going to do is I'm going to sell the 235 call option right now. And doing this alone makes this a very risky position because you're short a call option. So now to finish up this trade, what I am going to do is I'm going to buy a call option to protect the 235 call option that I sold. Just in case Netflix does end up rising, I can protect against the upward rise by buying a 240 call option. So when I buy the 240 call option, now my price has gone down even further. So now my total cost, instead of being $500, is only $330. So this actually is a much better position for me because my total cost is reduced. However, I do want you to notice that my maximum loss has increased. Now, the only reason this has increased in theory is because there is a potential downside drop. As you can see in this chart right here, if the stock does end up going above 235 per share, I do start to lose money from 235 to 240 per share. So this position could end up losing me a little bit more money. However, if I'm fairly confident that the stock is going to fall, then this isn't such a big deal. Yes, I'm taking on more risk. However, I'm reducing my upfront collateral. I'm reducing my upfront cost by a significant amount. So now I don't have to spend $500 $500, I could just spend $330, and now I can actually get a really big reward of still $1,500. So when I take out the cost, my maximum profit is $1,227. So essentially I can turn $330 into $1,227. So this position is really fantastic when you are bearish on a company. Again, I just want to remind you, you can make money as the market falls. You don't always have to be a bull. If you're afraid that the market is going to fall, having a little bit of this position in your portfolio makes a lot of sense. It does not have to be on Netflix. It can be on a number of stocks that you are bearish on. Just make sure that whatever stock that you're doing this strategy on, make sure that you expand the option and make sure the bid and ask spread isn't too wide. You want to use big companies because big companies have more open interest and they have more volume. The more open interest and volume, typically the better the bid ask spread. And because this is a 4-leg option order, what I mean by 4-leg is there's a buy, there's a sell, sell, buy. There's 4 different legs. There's 4 different options. And when you are dealing with 4 different options, this type of position can be harder to close. That's because you're dealing with 4 different options and each option has a bid and ask spread difference. So when you do open up this position and then you look to close, it may not be exactly as much money as you think. So for example, let's say that you open up this position for $330 and then it reaches a profit of $1,200. Well, still, even if you want to close it for $1,200, you're likely not to get exactly $1,200 because if you take a look right here, the bid ask difference is $40. So what that means is it's going to be somewhere in between. So instead of $40 difference, you're somewhere losing about 20 bucks. So if you lose 20 bucks 4 times, then that means if you have a $1,200 gain, it's really not $1,200. It's really going to be $1,120. That's because I'm subtracting $80 in terms of cost. This cost is very relevant to us, although it's not an exact fee, an exact cost, is still going to be factored into your trading profits. So just make sure that you're tracking this type of thing because it's very important for your trading profits long term. Now, this custom order is very beneficial, especially for stocks that are potentially reporting earnings. And if the earnings are not good, then you can make a ton of money off of this type of position. But you can also use this position just generally when you think the market's going to fall. So for me, today is September 8th and this position expires on October 21st. And you can do this anytime in the future. For me, this position right now is about 5 to 6 weeks out. So having a position that's 6 weeks out gives me a lot of chance and opportunity for the stock to actually fall down and start to make profit. And actually, you do not need to hold this position until expiration. So something that I would personally do is if this stock started falling down. So say that Netflix went down from, again, let's go to the chart. If it went down from about 228 per share and then it started to go into this range of around the moving average of, 216 or 213, right around this area of 215 per share, then in that scenario, then I would actually look to close this position. I would look to close Netflix and then just take a profit on my hands. So for example, if I invested $330 and this position ends up making me money, so say the stock goes down to 215 and then this position ends up being up around $500 or $600, right? So if I could turn $300 into basically $800, I'm going to close the position. I'm not necessarily going to go for the full amount of $1,227 in gains. I would look to close this position when I'm up maybe from $700 to $800 in total profit. At that point, I'd be pretty happy. I've hit my goals. I would close this position and then look to open up a new one. Again, if you want to follow my exact trades so you can make a lot more money, then click the link in the description so you can talk to me and we can just discuss coaching for you. Thanks for watching.